First of all, it's a pretty stark warning when it comes to what we saw over last month. And I know you're worried about a global recession. Where would you see it first?
We're already seeing the economy faltering here in Europe, in the US. All the major institutions continue to downgrade their outlook for the economy on a monthly basis. So what we're trying to say with this report, the higher prices feeding into inflation, forcing governments to cut interest rates, we're saying that the macroeconomic environment might deteriorate further.
So, Toril, talk to me a little bit about what we see next. I know, if we look at the production cuts caused by OPEC or put in place by OPEC that might cause a recession, are you actually calling OPEC Plus to reverse course?
We're not calling on OPEC we're not setting their policy. Obviously, this is for the OPEC to decide. What we're saying is that by cutting supplies to the market, it's preventing a rebuilding of inventories that are still critically low. So we think that by reducing supply at this time, the lower inventories, OECD inventories is still some 240 million barrels below the 5-year average. And they would have been even much lower than that had it not been for IEA member country stock releases. So we think that if we were allowed to let the inventories rebuild, it would be help to reduce the volatility and deflate the inflationary pressures.